Are you still waiting for a sign that it's the right time to make a move? Are you thinking about selling the house you own? Maybe you want to buy a new house? First time home buyer? Downsizer? Wanting to use some of the equity in your current home to buy a bigger home? I'm here with an October 2020 monthly update. It's almost the end of the month. I know I waited a little bit of extra time this month to bring you this information. And really, simply, that's because the Blanchard team has been super busy. Our statistics are looking kind of like they've almost never looked before, which is really good. That's just a really good thing for us and for our clients as well. Now there's 114 properties currently on the market in Basking Ridge. 7 of them are in attorney review, and 5 of them have contingent contracts on them. So if we take out the 5, we have 109 properties available. There have been 41 sales in the last 30 days. That is 2.7 months of inventory. If you would like some of this information at a more granular level, call me, text me, message me, and I will do the analysis for you at the price point where you're looking to sell or buy, or whatever price point or town is important to you. But suffice it to say, right now in Bernards Township, we are at less than 3 months of inventory. It's a really good time to sell your house. In a seller's market, sometimes it can be challenging to buy a house. I've done some videos on how to make your offer stand out. Feel free to review those videos later. So it's a good time to sell. It's a decent time to buy. As a buyer, it might be difficult to find exactly what you're looking for. All the more reason to be pre-approved and ready to go should you find something that you like, and also to be connected with a buyer's agent. Don't think you're going to get a better deal just because you're working with a seller's agent. Not necessarily the case. You want to have somebody who's looking out for you. On a more general note, let's look at what's going on in the real estate market and in the economy in October 2020. So we talked during the pandemic. I explained that they were predicting a U-shaped recovery, a V-shaped recovery. I can tell you, if you look at this chart right here, the real estate market has recovered and it is in a nice V shape. Mark Fleming, who is the chief economist at First American, says that we are in a V-shaped recovery, and as you can see by this slide, we are exceeding pre-pandemic levels. Now, I had indicated to you way back when that January 2020 and February 2020 were year over year so much better than 2019. And then, of course, the pandemic hit and the bottom fell out. Essentially, we all had 2 or 3 months off. But what we can say is it has come back. So year over year, the changes are illustrated here. We are up. Showing activity is up. Purchase mortgage applications are up. Contract sales are up. The only thing that's down is inventory and interest rates. Okay. So the question is, can we really keep this up? Can the housing market continue to power through on this train of I love my job? And to do that, we need to look at the economy overall. And I think that there are some pretty solid supporting factors or leading indicators that the market is going to stay strong from a real estate perspective. Consumer spending is increasing. It's still down from where it was in 2019, but it is steadily increasing. If you look at month over month over the last 6 or 8 months, it is increasing. Unemployment rate, I am not saying that our unemployment rate is acceptable. It's not, but it is coming down. It is getting better. And we're nowhere near the levels that we were at some of the past market crashes or recessions. I showed a house a couple of weeks ago to a couple. They were coming from, I can't remember, Bloomfield or some highly populated area, and they're looking for a little more space. And he said, I read in the paper today that there are going to be 6 million foreclosures. So I think this house might be priced high today, but In 6 months, I think it's going to crash and I'm going to be able to get a better deal. It is so not the case. And here's why. Just because you request a mortgage forbearance, that doesn't mean that you're foreclosing. That doesn't mean that you can't pay your mortgage at the end of the day. It means you can't pay your mortgage today. We are at record numbers when it comes to people having equity in their homes. I mean, at 42% of all households in the country the properties are owned free and clear. No mortgage. They have 100% equity. So in the 60% balance that still has a mortgage on their property, the numbers of people who have equity, which means they owe less than the property is worth, is higher than it's been in probably decades. So more equity in your home gives you more options. You can restructure your loan. You can sell your house and buy one that's less expensive and become one of those people without a mortgage. More equity means more options for people. We are not facing the same numbers of foreclosures that we were facing after 2008. So there is no crash coming. This is not 2008. Inventory levels are at historic lows. Equity positions are at historic highs. The big financial institutions are predicting appreciation in house values, not depreciation, not tons of inventory, not a buyer's market. That's going to depend on location and area and type of house and whatnot, but everybody is saying that prices are going up. The only obstacle we have is a lack of inventory. And people sometimes are afraid to put their houses on the market because they don't know where they want to go. And if there's a lack of inventory, they're going to sell. Where are they going to go? So those are the types of things that we have to work out. But overall, the market's still pretty strong. I hope you have a great Halloween.